The Hedgeless Horseman here. It's June the 23rd, 2025. First of all, thanks to my banner sponsors. As always, consider me biased when I talk about any stock I own. Twice biased if they're a sponsor as well. I thought I would go through some musings about market investing, especially investing in this space. First of all, look at the markets today. Obviously, everybody has probably heard about the Iran and Israel and the US thing, where there's missiles flying and bombs flying, yada yada yada. Surprisingly, given what appeared to be an escalation, crypto sold off quite hard. Bitcoin sold off hard on the news of the US dropping bombs. So just basically further evidence, like we needed further evidence that Bitcoin is a very much risk on asset. As soon as there's fear, it goes down. 1 second. As soon as there's fear, it goes down. And during the night, I guess, things turned around. Oil went from up to getting crushed. Interestingly, even despite Iran saying something about having voted to close the Strait of Hormuz. And it also kind of goes to show, in a sense, this could be, buy the rumor, sell the news kind of thing, that it was already priced in, and when it happens or it looks to be happening, everybody had already gotten long, so they're taking profits or selling into people who are buying on the news, let's say. But you never know. Also, Trump was out there talking about, don't you dare raise the price of oil, because it's my understanding that typically it is a rise in oil price that tends to be the typical external shock, in a sense, that actually creates a lot of the recessions. So one can understand why Trump is very, let's say, adamant on not letting oil prices go up. And of course, they could be up tomorrow. It's like always the markets. I have no idea. And that's why I don't try to bet on these things. I don't try to predict anything. If I had to guess, I would expect gold to have been, well, it is up, but maybe up more. I would have guessed that oil would be up, maybe this amount, not down. Again, it could be buy the rumor, sell the news, yada yada, something else. The market thinks that, well, it's not an escalation, it's going to get wrapped up soon, so in that case, oil is going to go down, yada yada. You never know. Again, is that where I find my edge, trying to outguess millions of analysts and millions of market participants who, who have geopolitical think tanks and satellite imagery and inside information from who knows. Any of the warring parties could be leaking to anyone, and that's what's actually happening, and then some big player actually goes to town on that information. There's no edge there for me. That is without my circle of competence. I don't even try to play that game. Everybody else is playing that game. And of course, not only is that game hard to play, but this game that's extremely hard to play influences everyone else on a daily basis. Because as you know, if gold and silver are up, miners and juniors tend to be up, and vice versa. Why? Well, it's not that much changed. Might as well be down tomorrow, so why would you buy today if gold is up, if it's going to go down tomorrow? But nobody knows that, right? Everybody's kind of betting on tomorrow being the same weather as today. And that's the thing, right? Nobody sells lows if they thought it would go up shortly afterwards. And nobody would buy highs if they thought that was near a high and a top. But everybody kind of just, gets influenced by daily price swings, because one day is one data point that could lead to a trend. That's yeah. Going back to, I don't play those games. I mean, that's what I kind of been thinking about lately. I've been, getting kind of bored, and I couldn't really pinpoint why I've become kind of bored. It's like I don't care about the money that much. I like the game. I like to try to outthink, outsmart, outweight. I mean, using any tool necessary really to beat the market, because then you're beating obviously the market, which is the sum of the more, every investor turning into the marginal investor, yada yada. So it's just fun. I mean, it's kind of like you're beating humanity in a sense if you can outperform the market, because Mr. Market is every market participant boiled down to Mr. Market. I think I've gotten kind of bored in a sense. Well, first of all, it's like I don't do much. I don't do much trading. I think being an active investor, even though I'm very much a full-time investor, but actually being that active, I think that's the more actions you take, I think that has a correlation to worse performance. So typically, the less you do, the better your long-term results will tend to be, and it's damn hard not to do much for a long period of time. But yeah, I mean, I don't know why it's become somewhat boring. Maybe that's some kind of a phase or something. It's just sometimes the market feels so dumb and easy that it's not fun. Not that I know what every company is going to put out in news. I have no idea what any stock is going to trade tomorrow, yada yada. But if you just go down to the basics, is there stuff that looks incredibly undervalued out there? If you consider all the possible things that could happen in the future, let's say over the next 3 years. Like, yes, a lot of them. A lot of them look really cheap. Some are high risk and still cheap. Some are low risk with medium to high reward even. So they're very cheap. And then there's technically nothing left that's required to do except wait and watch, a news release that might come out once or twice every month for any particular company. And as long as they're undervalued, there's no obvious reason to sell. So it's just a lot of waiting after taking, in my opinion, maybe kind of blatantly obvious cheap bets, and there's a lot of them right now. And it just feels like it's very much hard to lose in a market that is this dumb and impatient if you just have common sense and patience. Even to the point that it's getting kind of boring. It's like I've been thinking, maybe I should look into picking up some new hobbies or something, because I think, as always, if you're just able to buy and hold cheap, I don't see how you can lose with, let's say, proper risk management, where you don't bet everything in, you don't put all eggs in one basket or whatever. But if you find 20 cheap juniors right now, and fast forward 5 years or whatever, at least longer than the short term, I just don't see how you're gonna lose. So then it's not really a fun game in a sense, because you have already figured out what you need to win, and then only waiting remains. So what else is there to do than wait? Not much. And what are you going to do then? I mean, I post memes a lot of the time. I obviously do a lot of research and think about juniors and all that. It's more or less to maybe try to outperform even more. I don't mean this to sound arrogant, but I really think so, that if one just is able to basically refuse to ever sell cheap, I don't see how you lose in any sector. Obviously, you have to have some kind of whatever. You have to have some kind of experience and competence, I guess, to figure out what you think is cheap and why it is cheap, what the market is missing, and all that. But if you have some, again, basic stuff, common sense and patience, I just don't see how one can lose. Like, I mean, permanently, whatever. It's just a matter of time until one wins in that case. Yeah, and it's certainly not sexy. I mean, you know, the all the whatever, uh, all the promotion, etc., on Twitter or on investing.com or whatever. Okay, maybe not here because they're promoting a printer, but the whole financial industry is kind of, and that goes for uh, influencers. Yeah, I mean, I guess influencers, newsletters, yada yada. I mean, the whole financial market kind of revolves around, you know, the fact that people want to have positive returns and positive returns quickly. Everything. I mean, 90+% of the content is what a stock or an asset might do in the short term. That it's going to go higher from here in the short term, or lower, right? I mean, nobody can really create a newsletter where, oh, you know, once a year I'm going to come out with 20 picks that you could just buy and hold for 3 to 5 years, and you're probably going to make money on them. Or even entire asset classes. That's just too boring. Everybody wants to be active. I mean, I like the saying, the illusion of action, because investing is probably the only human endeavor where actually less action is creating, on average, better return. Better results. I mean, you can't really do less. You can't go to, typically, the less you go to the gym, the fitter you get, right? No, that's not how that works. The less you practice Spanish, the better you get at Spanish. No, right? That's not how that works. Investing is, again, probably the only human endeavor where you literally help yourself by taking less action. And I don't mean thinking. I mean, if you think about the cases and all that, the more due diligence, the more you think about the concepts of investing in risk reward and learn about geology and mining engineering, I mean, that's gonna probably help you, obviously. But if we're talking like buy and sell decisions, trading and all that, and to be honest, I mean, let's say you were able to, get good enough that you could, on a long term basis, let's say compound 20% per year over 10 years, uh, and have a relatively hands off hodl approach where you take longer term bets. Like, I mean, that's more than 20%, but the idea, if you find something you think has a very high probability of being up 100% over 2 years, I mean, that's a great case. That is a great case. That would be like 41% compounded per year, which is disgustingly good if you could keep that up. Where was I going with this? Oh yeah. I mean, I'd rather find a way to have a solid to even great average compounding returns on a 10-year period, let's say, where I don't need to do much. I don't need to watch the portfolio every day, every second. I don't need to care about a bunch of stop losses and buy triggers and taking profits or stuff like that. Whereas, like in poker, for example, and that's one reason why I hated poker and why I like investing a lot more, from that perspective is in poker, if you were not playing a hand, you were not making any money, even theoretically. And you could be playing hands, you could be playing 1,000 hands in one night, and you could be losing money. And there's no paper losses in poker. If you lost money, the market doesn't owe you anything. It's not like, well, it's undervalued and it's going to come back. No, on a long-term basis, you're going to get your expected value returns. That's true. Whereas, like, I mean, if you lose with aces 60% of the time, for example, in a night, and that makes you lose on that in that night session, next time you might win 90% of your aces. So it evens out from a statistical standpoint, but that's also in over the long term, etc. But there's no inherent, like, you can't lose a hand and you're gonna get that the money you lost in that hand back necessarily from that person or whatever. In investing in it, it's at least, I mean, you can be down in something. Let's say you're down 50% in something you bought, you thought it was really, really cheap. It's down 50%, so now you think it's ridiculously cheap. If you end up looking right in that when you started off, it was really, really cheap already. I mean, sooner or later, that minus 50% is probably going to turn into maybe a pretty decent gain, maybe 100 to 300% in time. So that's a paper loss in that case. That's not a permanent problem unless you obviously sell cheap, for example, and don't buy anything that's even cheaper with that money. Then you have monetized a loss, and that's obviously a bad decision if you sell cheap, something that's ridiculously cheap, let's say. So from that sense, it's not a permanent problem. The same hand can give you minus 50% in paper losses first, and later on plus 200% in paper gains. So it's not necessarily, I mean, again, it's like a lot of, especially with the volatility in this sector, it's just crazy that, I mean, you can have this exact same companies, almost exact same fundamentals. If you bought before the sector bottom, you might be down on all of them. If you look 1 year after the sector bottom, you might be up in all of them. And nothing really changed. That's how chaotic this sector really is, and that's why you can't really take paper losses or paper profits too personal, because that might change from a day-to-day, week-to-week, year-to-year basis, etc. And if you take the paper profits too personal, you get more in the paper losses. So it's like, and honestly, and I've shown this before, look at any real success case like Lundin Gold or NGX or Great Bear or whatever, Snowline. I mean, even the 10 baggers, the 10 to 20 baggers that became 10 to 20 baggers over 3 to 5 years, over 90% of the time they were not making new net highs. So you can be in a roaring success case that will be talked about for 10 years later, and when you're in it, if you're hodling it, over 90% of the time it feels like you're not making money on the stock, because it's not making new net all-time highs. It's consolidating, trading sideways or down. And then after consolidation is done, it goes up, yada yada. It's just when you look back like 3 to 5 years later, all those small net gains that come sub 10% of the time, they add up to 10 to 20 bagger. And people, I remember looking at Kirkland Lake, for example. Everybody knows or most people know how they get acquired by Agnico, and they was one of the best performing stocks for like 2 years or something. And the chart look absolutely marvelous when you zoom out over a X amount of year period. But when you looked at, okay, if it became a 10 bagger over, I don't know, 4 years, or for example, it's like, what's the annual compounded rate? It's I haven't done the math right now, but it's not as impressive as you think. It's not like they're going up 100% every week or month. No, 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 no. 10 baggers tend to be a lot slower than you think. I mean, put it like this: if you looked at Curtin Lake or NGX or Philo Mining or Snowland, whatever, and you look at a chart now and you zoom out, you'd be like, whoa, oh, I would love to have been in that stock. Wow, look at that, compounding where the chart in nominal terms goes, looks like it's going exponential, right? But if you pitch the very same returns to anyone, it's like, hey, I have a stock here. It's going to return 50% in 12 months. I don't think you could get many junior investors to buy that. 50% seems way too low when people see stocks going on 50% in one day on occasion. That's what people arrogantly think that the type of returns they could get. It's mind-numbing when we think about how super unrealistic our return expectations are. People are actively, I mean, if you look at what people do, and probably myself at times as well, how it shows up in practice, in reality, how we think, what kind of expectations we have, like what kind of a stock, if a positive news release is, let's say, 3 months out, then it's too boring, even if we thought it could get us 50%. I mean, I swear, I think that's even the case. If you pitch someone even, let alone 12 months, but like 3 months, if you said, hey, this stock is going to go up 50% in 3 months, I still think that would be too boring for most people. Even though if you add that up, that would be the most obscene compounding anybody's ever seen, and in 5 years you would probably be, as rich as Warren Buffett. Super unrealistic returns, but on a case-by-case basis, how people act, it translates to those obscenely ridiculous, unrealistic return expectations. Yeah, going back to my point, if I, let's say I wrote up a case, and it's like very, very, as confident as I can be that this this company is gonna be worth 50% more in 12 months. Again, I don't think anybody would give a shit about that. And then let's say in 12 months that happened, and I find a new story where it's like this is going to return 50% in the next 12 months again. Nobody would care. And then 2 years later, I would come up with a new company after the second one returned 50%. I mean, that will translate into 10-bagger returns quite quickly, not too many years, on par with how many 10-baggers actually develop. That kind of compounding pace. My point is that not many people have a clue what the compounding rate of a 10-bagger is. If they just look at a chart, if I pull up a chart and it's like, oh, it's up 10x over 4 years, for example, or 5 years. It looks like it was rock and roll all the time, and everybody was just cheering in the stock. But when you actually calculate the CAGR, compound annual growth rate, it's not nearly as impressive as people think. So that's why people don't often sit in 10-baggers, because they are too boring. Because 90% plus of the time they're not making new net highs. Think about that for a moment. That's why I put up that's why I urge anyone to play around with compounding calculations. And I think a good start would be look at how much money you could make if you found if you made a portfolio where you think, hey, in 2 years I think these companies could be have doubled the market cap, so around 41% per year. Then take 41%, put that into a compounding calculator. Let's do 10 to 15 years. And then let's say you add, you deposit 100 or 200 bucks every month. Your portfolio is going to be worth a lot in 10 to 15 years. A lot. Even if you start with $10,000. Is that achievable? I would think, yeah, probably is achievable. To try to find probable doublers over a rolling 2-year period, because this sector is so inefficient and dumb that there's plenty of cases that could probably will go down 50%, but could go up 10, 15, 20, 30x in the next 2 years, for example, or 3 years. Could, not saying they are. Yeah, I hope some of that made sense. I mean, I look at it too, because I have, it's easy to get greedy. It's really easy to get greedy. And when you think about it, how greedy we are, then I come back to the fact that if I think, let's say 100% in 2 years is too low of a return, then I have to check myself. Go into the compounding calculator and realize how ungodly good, but like how good it would be if we were able to find probable doublers over a 2-year period and just repeatedly find them. Our portfolio would grow 41% per year on average. Obviously that can look like minus 30% 1 year and then up 100 and whatever. 40 to double in 2 years. So again, if you look at how people operate in any sector, we're way too greedy. Obnoxiously greedy. And then you realize that you don't need even to be greedy to make a lot of money over a 10 to 15 year period. And you realize that that's a much higher probability of happening, getting rich slowly, than getting rich overnight or rich quickly. Because that's what everybody's trying to do, going back to obnoxiously unrealistic return expectations, and that's why nobody really makes money. Almost every one of us are too greedy. Anyway, I thought I would also go into psychology of I was going to say times like this, or the junior sector overall. So this is a conversation I had with a fellow retail punter who's, most of the times he contacts me, he's bitching about the mining sector, the junior sector. He has a very concentrated portfolio. He doesn't know too much about mining or juniors, or I don't know if he knows that much about investing overall. But this is a classical, and I'm not trying to, make fun of him. I'm trying to use this as an example of how buy low, sell high, and all of that common sense and patience stuff goes right out the window, basically. How sentiment and yada yada plays tricks on us. You can probably read this. Basically, the cliff notes are that he thinks it's kind of different this time. I have heard this stuff at every low. That's the thing. If you have never seen a low in this, if you never pulled out the short that shows that the mining sector always crashes and always rallies, you might forget the fact that it always does that. But this guy basically thinks it's different this time. There's no reason it cannot happen. I don't remember exactly what he said before. This has been my explanation over the last couple of years, and until it changes, it appears I am correct. And this is, of course, there's a guy on Twitter I also have similar conversation with. They think, a couple to a few years is an eternity. They believe that, during this period here, for example, they make conclusions about the sector based on this because they bought in around here. So this move here is the only thing they've seen in the mining sector, and then they form an opinion how this sector always is, because it was like 3-4 years of a downtrend, and they've never really averaged down. They've never seen an uptrend. They've never seen a bull market. They've never seen it go from low to high. So they make conclusions about from their experience, which is only this. So they're missing half the picture. Anyway, so I just point out, set at every low. Why else do you think anyone sells low? My point being that everybody sells low because they never think the low is the low. Every single low, people think it's different this time. I don't remember the exact excuses for people selling this low, but probably, it's different this time because nobody would obviously sell here, over this 1 to 2 year span if they thought this was going to happen. No, so everybody forgets that this sector can go up when it's going down. Everybody forgets that this sector can go down when it's going up. And here were other excuses. Here were other excuses to buy. Here were other excuses to sell. Here are other whatever. I don't know if you were high or low. I don't think GDXJ is necessarily like super duper cheap, but it's probably cheap. But it's not, maybe extremely cheap. Every low is sold because it is different this time. Literally, why else would anyone ever sell low? It's just excuses that change. And then, but this is the things like. Everybody does what feels right to them, and then they justify it. I see that again. There's another guy on Twitter who basically does the same thing. You can tell that they want to, when they don't feel like buying, when the sector is really, really shit, they come up with emotional reasons for why they shouldn't do it, right? And they get kind of triggered. A lot of them get triggered if you're bullish because they're afraid that you might be right and they should be buying, but they don't feel like buying at all because they've lost money. They've only seen a bear market. So that kind of rattles them in a sense, and then they tend to get emotional and they explain why their feelings are correct, why they shouldn't be buying, etc. Anyway, so he goes on to say, you're ignoring my points, which are valid. The mechanism to which people look for FOMO and greed changes all the time. There's nothing that can guarantee you money will ever. All right. There's nothing that can guarantee you money will ever flow back into these miners. I've seen it time and time again in history. History shows us this could be the case. Obviously, grammar is not perfect. So what? Are there grains of truth in this? Yes. The mechanism to which people look for FOMO and greed changes all the time. Crypto wasn't even around 20 years ago, right? And that's obviously an outlet for extreme greed. And these, Bitcoin treasury companies and all that. So there, and like, in the 1999, the 2000s bubble, it was, IT companies, pets.com and whatever, maybe Beanie Babies, and before that, whatever, tulip bubbles and yada yada. So yes, in a sense, it's what they say. History doesn't repeat, but it rhymes. So there's some truth in that. So that's his crutch in this case, that there is some truth in that. There's nothing that can guarantee money will ever flow back into these miners. I've seen it time and time again, and history shows us this could be the case. Is that a true statement? Has he seen time and time again in history that money never flowed back into these miners? I don't know if he meant miners like juniors or miners as, mining companies, but regardless. So he's saying he's seen it time and time again through history. That money never flowed back to miners. That's obviously categorically false. I've shown the Barron's Gold Mining Index over 100 years. Every single rally was followed by a correction, and every single correction was followed by a rally. That's categorically false. So he's using something that is true as a crutch to then kind of project it onto his current situation where he doesn't feel like he wants to give up, right? So he's kind of fooling himself in a way. Crypto's changed it all, man. This is where people go to scratch their itch. It's killed these miners. People can get 24/7 fix on gambling and foaming something far more liquid than these miner, which there's almost no money in. Parts of this is obviously true. Again, yes, this is a different greed vehicle than we've seen before, and this is the purest form of a greed vehicle in a sense. Because Dogecoin, everybody knows it's a joke, but it still had $70 billion market cap. So this is kind of unprecedented greed in a sense, because this is like blatant greed. I mean, it's not even a high risk, high reward biotech company or whatever. It's like there are no fundamentals. It's a joke. It was created as a joke, but people bet on it. So at least there's not too much delusion. What do you call it? Delusion? Yeah, delusion, I guess. Because I think that most people who are trading, what's it called? A Dogecoin, for example. I mean, I would think they know what they're in for. It's like the Melania coin that went down 95%. I mean, I would think that everybody kind of knew it. I mean, it's absolutely worthless, but everybody who bought it because they think somebody else is going to buy it higher. So basically the epitome of greater fool trading strategy, the epitome of trading sardines. Everybody's just trying to front run everybody else. Everybody else's greed, in a sense. So that's true, and the crypto has changed it all, man. In a sense, yes, but the question is, well, change it all. It's the most liquid casino, at least. I mean, you could just go to a casino and play roulette. So that there's online roulette tables and all that, right? So it's not necessarily that much of a new thing, but it is the new thing. But also, I mean, can one assume that there's going to be rampant speculation in tokens and crypto forever? I certainly don't think so. I certainly don't think so. I think that's going to die probably with this monetary system at least. But enough people get burned. There's always going to be some, or speculation is always going to be part of humanity. But that kind of rampant speculation, I mean, I personally think that it probably has already topped. It's only kind of Bitcoin that's hanging around near its all-time high. So I don't think that's the case for most cryptos. So personally, I think that I think the crypto has already peaked. I might be wrong on that. The casino might get even hotter again, but I for sure wouldn't consider cryptomania that's something that's going to be permanently with us. And then I just, I mean, I found his proclamations here kind of funny. So I just asked him flat out, when was the last time it never flowed back into these miners? Because again, harping back to, there's nothing that can guarantee you money will ever flow back into these miners. I've seen it time and time again. History shows us this could be the case. And I just, again, trying to snap him out of his, let's say, emotional rationalism in a sense, that he's deluding himself here. When was the last time it never flowed back into his miners? Now. So I mean, obviously, he returned somewhat to his senses. When I asked him flat out to explain when, all these times in history that money has never flowed back. he couldn't pick one, but it boils down to, and that's what I mean. This is him rationalizing, trying to rationalize to, let's say, sell low or whatever, not buy low, in the form of it's different this time. So he uses a bunch of some truths, then he warps that into excuses based on some truths, but he applies it incorrectly. So then I check him on it, and then he just comes up with now. So basically, this time, in his opinion here, all of a sudden, is the first time that money never flows back. That's kind of a leap, again, given the fact that this is not true, never happened before, that the money has not flowed back into miners, but this time is different. And then he kind of, I guess, realizes that there are no examples of that. Maybe it will, maybe it won't. I've said for a couple of years it will not, and so far it still has not. This is the longest running drought, and everyone keeps waiting for volume to return. There is not. What if it never does? If you look at overall volume in the exchange, it's laughable. Yada yada. So, if you just summed up this, what is it talking about? Maybe it will, maybe it won't. I've said for a couple of years that it will not, and so far it still has not. So, and I mean, he's kind of beating himself on the, beating his chest here, saying that money will never return to, I should pick the more a junior type, maybe this one, Defiance, for example. So he said, for the last couple of years, whatever, he said that they will never return and so forth. Money is not flown into the junior sector. What's so different about this time period here than this time period here? Not much, right? So far. Yeah, it's gone on a bit longer, I guess. That's about it. That's his proof. This is the longest drought and everyone keeps like, this is exactly how people feel, and this is exactly the rationalization people do at every goddamn low. That's the thing. Again, that's also the thing why I'm kind of getting a bit bored, because once you figure this out, once you realize how stupid we are in practice, how stupid the average investor is when it comes to operating in financial markets, you can never take the market seriously again. Because this will never change. This is exactly how it's going to sound at every low and every high, for all eternity. Every single mining bottom over the last 100 years, this is the exact rationale people increasingly use to get them not to buy low, but to sell low. And then they even come up with reasons why this time is different, and it's happened a bunch of times when it hasn't, yada yada. He's just simply describing huge pessimism. And I thought everybody had heard the idea of buy low, sell high. But again, in theory, everybody knows that. Everybody's heard that. In practice, almost nobody does it. Almost nobody does it, because it ends up messing with your head, and then you draw these kinds of conclusions. And I think it was so I posted this on Twitter, and then I pasted it our conversation to him again, and I said, do you know how funny you sound right now? Has money flowed into the sector? No. Hasn't for 5 years, longest ever. Why is that not a valid point? Again, it's like, valid point for what? I mean, what is he literally saying here? Has money flowed into the sector? No. That's the same with every low, first and foremost. So it's like, okay, it's a sign we're not at the high, right? We're not. If you have a tendency, like I think he got in, around this time in juniors, for example, money had been flowing in, right? Money had been flowing in the 2016 top as well. So if he's complaining about money not flowing in, we know we're not high. That's a good start. That's a good start for any cyclical sector. It hasn't for 5 years, longest ever. Why is that not a valid point? Correct me if I'm wrong, but it's like you would want the most to have the most extreme buying opportunity. You would want the most extreme pessimistic sentiment, right? What happened when? Let's take optimism instead. So what happened when, if some people might have experienced or at least heard about the Japan bubble? Let's see if we can find major indices. Let's look at Japan. Okay, let's do the Nikkei 225 and then also let's do Nasdaq. So Japan had one of the biggest stock market, overall financial bubbles in history, if I remember correctly, back in up to late 80s then, topped out at 1990. So this was pretty good move up, right? Huge bull market, insane bull market. Wow, Jesus! I mean, look at this move in a stock market index. So this is probably one of the most absurd stock bubble any country has ever seen, right? I mean, I remember there was talk that the Imperial Palace in Japan was priced higher than all of the real estate in California or something like that, like something absolutely ridiculous, like Dogecoin being worth 70 billion, for example. Okay, yeah, so that was a absolutely huge bubble, and of course nobody everybody thought it was different this time. That's why they bought. They all, of course, thought that it's going to continue. Tomorrow is going to look the same as today, right? Continuously so. And of course, if the market was right, it's very, very bullish. That means that there's only blue skies ahead. Okay, so what happened after this ridiculous bubble popped? So ridiculously good bull market. The stock index went down 82%. 2009. Yeah, 20 years. 20-year bear market. So if this was the one of the most ridiculous bull markets anybody's ever seen in the stock market, yeah, what followed after was a 20-year bear market, minus 82%. 20 effing years of bear market after this huge monumental bull market. And it took until 2000, so around 35 years for the index to get back to its previous high. 35 years for a new net high. And of course, lo and behold, was this an extreme bear market? Yeah, it was an extreme bear market. 20 years. 20 years downtick. Oh, Jesus. Where was I? Here. What happened afterwards? Pretty good bull market. 2024. Okay, not as extreme as this, but this is a pretty good leg up, right? 513%, 2009. Yeah, okay, not monumental, but that might also be a sign then on just how ridiculous this was. So it took 35 years to get back. Let's look at Nasdaq. My point is going back to, it's like, oh, this is the worst bear market everyone's ever seen, yada yada. Well, this was a pretty fat bull market as well. Yeah, only 1,400% in whatever 9 years in a stock market index. What happened afterwards? well, it went down 80% in, let's say, 2-3 years. And it took, okay, this was kind of almost the same. So let's say net gain started to happen after this. 16 years of consolidation after that top. So insanely big, biggest Nasdaq bubble ever, I guess, in the last 40 years or whatever. Once that popped, 16 years consolidation. The index was still down 75% 9 years later. 9 years bear market. Or I guess technically, one could say it's a bull market, but it's like, because it's slightly higher than here. But basically, almost a decade long bear market. So when he goes on, I mean, that's the funny part. He's like describing, record low interest, longest bear market. Like, what do you think is going to happen after this bear market? So imagine the travesty of, like, you're deluding yourself, talking yourself out of participating in the cheapest, let's say, junior sector we've seen in maybe, I don't know, cheapest anybody's seen in what, 40 years plus? I mean, that's what the Ross Beatty and Rick Rule, etc. said in last year. And we're not up like, yeah, we're up, many juniors are up, but it's not like they're up 2,000%. So yes, personally, I think the juniors, average junior bottomed out in 2024. So I think we're a year into this bull market. It's not a raging bull market, but I think, and that's also the point. Everybody know, well, let's say we can say that it's a bull market now, or for sure, if we go a lot higher and fast forward 1-2 years, we can definitely say it was. If that happens, we can definitely say the bear market bottom was in 2024, but then we're obviously 3 years late to buy it. A bear market bottom is only known in hindsight. So ironically, if you know we're in a bull market, the best opportunities are gone since maybe a couple of years. So you kind of have to be early, or otherwise you're going to be late. But anyway, so then I'm trying to get him to realize what he's saying. So to sum up, money has always flowed back into this sector, as we know. Again, fact checking him on this nonsense. But this time it's different. This time it won't. This time it may not. Correct. Exactly. So now he agrees, at least. I mean, he acknowledges that this was just emotional bullshit, and that's never happened before, that the money never flowed back. This time it may not. Correct. Without ever have, and then again, I'm just trying to I'm trying to get him to realize what he's actually saying, that is, different this time, without ever not having happened before. But this time it won't. This happens all the time in many markets, right? Again, going back to this grain of truth here, I'm talking about this sector, but it has happened in many sectors, but it can't in this one. I'm talking about this sector. I don't give a shit about other sectors. I think the crypto sector is gonna die one day. I'm talking about the mining sector. We were talking about, so now he's kind of again trying to justify his emotions or what he likes to do by dragging in a bunch of other shit that's not really that relatable. It has happened in many sectors, but it can't in this one. I'm talking about this sector. Why not? Why is this sector immune? And then again, if that is his worry, then I'm just trying to snap him out of it. So to sum up, money's flowed back into this sector, as we know. But this time it's different. Why is this sector immune? You're only saying the same thing over and over. Tell me why this sector would be immune, but others are not. Again, maybe I don't remember if we kept going after this, but at some point it's like I give up. There's just so many things I can try to explain why I don't think it's a good idea that bet on something that has never happened before, meaning money never flowing into this sector, that the mining sector is going to be, I don't know, go down forever, permanently going to go away. I mean, okay, how would that happen? I mean, civilization is going away. Well, in that case, we're going to have bigger problems than our mining portfolio. Then it doesn't matter. So it's a moot point. But yeah, I'm trying to like snap him out of all this emotional rationalization. I mean, he desperately wants to sell low, right? He desperately, because I know, you know, at least a few juniors that he's in, they're, you know, they're not at, let's say, 52 weeks highs and all that. I might not necessarily agree that I wouldn't have the same kind of positions he has, but this is obviously him trying to rationalize selling low, because that stock is not at 52 weeks highs, for example, or his stocks. Oh, excuse me. But this is what the market does to almost everyone. This is not uncommon at all. This kind of thinking, this kind of emotional rationalization to do what feels right. Basically, I want to make I've had so much pain. I want to have the pain stop, and obviously everybody knows that, like, okay, what would be worse than having, let's say, paper losses? That would be obviously selling a low and cementing paper losses to real losses that would later turn into whatever. If you bought low instead, if you doubled down, for example, you would actually end up making money. The worst thing, obviously, is that if you go to Nikkei, for example, I mean, you don't want to buy here and sell there, right? Ideally, you would want to sell here, buy here, and sell there. But if you buy here, sell out here, I mean, just holding somebody who held got his money back 35 years later, at least. Somebody who bought here, sold here, lost 82% and didn't participate in the upturn. So that's obviously that's why I also keep saying that. You've seen my slide where I showed that, okay, three people buy high, or let's do it like this. 3 people buy high here. At this point in time, one sells, one holds, one doubles down. Then the sector or stock, whatever it is, goes back here. The one who sold, he cemented minus 70%, let's say. So that's his return from this sector or this stock, whatever. Minus 70%. It took a paper profit that we would later know was a paper loss, cemented it to a permanent loss, so it's minus 70%. The one who held, he might be up a bit because this high later on is higher than when he bought in. And the person who decided not to hold but to actually average down a bit, he's gonna have made money much more, obviously much more than the holder would make a lot more than the seller, and the buyer would make more than the holder and a lot more than the seller. Same market, same exact way it all played out. 3 totally different decisions and 3 totally different future returns. So I mean, you can tell, I mean, as soon as you, that's why I keep talking, it's like common sense and patience, common sense and patience, and patience. This is not common sense. And he's obviously running out of patience. That's a disastrous combination. But I think this is a really good example, though, how the market plays tricks on you. Because I'm sitting here, going back to what I said earlier, once you realize how freaking dumb this sector is, this guy's not dumb, but a lot of people, including myself, at probably a lot of times, more so in the early days of investing, we do so dumb shit in the market. We do so many stupid mistakes. Because we don't have common sense. It's like when I thought, oh, the only way to make money in the junior sector is to go all in on pre-discovery plays. The only way to get a 10 bagger is that, oh, I need to be in before the discovery happens. Well, that was just a mistake on my part. It's like a lot of discoveries, they have a much higher chance of going up 10 times after the discovery hole than before the discovery hole. Before the discovery hole, it might be, I mean, depending on the project, obviously good people are going to pick better projects and all that, better targets. Let's say the average shitco, who knows, maybe 3% chance of any one maiden drill campaign coming up with a discovery. And let's say even a whatever run-of-the-mill junior, they drill some greenfield target, come out with a fat intercept that's not been drilled before. All of a sudden, hey, let's say that stock pops 100%. It's probably multiple times more likely that that stock will actually go up 10x after the discovery hole than before the discovery hole. So the risk reward, I mean, imagine it's like, okay, or take a stock that's like, oh, pre-discovery, it has a 3% chance to go up 20x in the next 3 to 5 years. And after the discovery hole, it has, let's say, a 30% chance of going up 10x. That's a much better risk reward. So only 70% chance of loss versus 97% chance of loss. When should you be betting big in that case? Betting big when there's a 97% chance of loss? Getting your position cut in half? No, but I did that. I wasn't necessarily all in every case, but I took big positions early on because I want to get rich quick. I want to make money quick, and I thought you needed to get in at the exact bottom in a high risk, high reward story if you want to make any money. And of course, alpha risk is completely different than beta risk, where they have something, the pendulum just swings, yada yada yada. They didn't. I mean, the finance, for example, didn't discover anything. Oh, here's when they discovered something. That's why that happened. No, this was sentiment driven mostly. Yeah, and just other, common sense, whatever. It's like, did I know gold was gonna be at $3,400 in June of 2025? I had no idea. But it's like, as long as, in my opinion, as long as this number is going up here, as long as the U.S., for example, is taking on more debt, I'm expecting higher gold prices in the future. Because that's a problem that's getting bigger and bigger. And the numbers are getting pretty insane. Obviously, mathematically, they're never going to balance this out. So, in a sense, I think there's going to be a gold bull until there's a reset. And we'll know when it's going to be over when the reset happens. Because I don't think there's a likelihood that the U.S. or any of the over indebted nations are going to turn this around, except maybe, I don't know, AI, robotics, whatever. We have this, universal basic income bullshit, but at the same time, I mean, the robots gotta eat. The robots are made of something, so that's why I like commodities as well, because it's the bottom of the necessity pyramid. What is it, Maslow's ladder, whatever. Whatever technology we have, there's going to be commodities that needs it. I mean, if robots are going to build the TVs need materials, and the robots need materials, even though we don't need a human to assemble it. And if we get super productive, everybody's going to be wanting more TVs. I mean, imagine if TVs or cars drop 50% in price, and I mean, all else equal, obviously there would be much more demand for them. But people will, lose their jobs if the robots take over. But again, the robots need to be made of something. And just, just the reminders. Like, I find myself, when you, see some homeless guy on the street or somebody's in a wheelchair or somebody who, I don't know, burn victim or something. Like, there's plenty of people who have it much worse than us. So I mean, just the fact that we can bitch, just the fact that there's a bunch of grown men bitching about their whatever. First of all, they usually don't have a clue of how they're investing, so they're gonna get the returns they deserve because they don't have they don't apply patience or common sense. So it's a self-inflicted wound, but it's also a luxury problem, right? To be bitching about, I have paper losses in my gold is up and my junior shitco portfolio I was gonna use to get rich quick, that's not even up a lot, or it might be down. That's pretty much a luxury problem. I mean, how many people wouldn't want to trade their real problems, in a sense, to this kind of luxury problem? So I mean, I like to check myself on that front as well. It's like, whenever I, whatever, feel like, poor me, the portfolio is not 10 bagged in the last 5 years or whatever. Hey, I mean, at least I can afford to invest money and have paper losses. And also, I mean, going back to the fact, the whole Nikkei monstrous bull market leading to a monstrous bear market, leading to a fat bull market, or Nasdaq, huge epic bull market bubble leading to the decade-long bear market and taking 16 years to break even. And then we have his, comments that he said himself about how shitty this sector is right now. There's no money. He believes it's different this time. I mean, Jesus Christ, do you think anybody thought that Nikkei would ever go up after being part of this? Or did anybody think that the Nasdaq would ever drop 75, more than that? Do you think anybody thought that Nasdaq would drop 80% up here? If the market knew that, obviously it wouldn't be trading up here, it would be trading down here. The market has no idea, especially at extremes. It doesn't know how. The market always believes it's right. It has no clue just how wrong it is. And if we just look at, I don't know exactly what goes into the SILJ index, but honestly, I mean, if we just think about it, do we need, for example, silver in the future? Yeah, I think so. We hear about the record, deficits, years in a row, yada yada. And I mean, there's a shit ton of silver above ground, obviously. But anyway, every mine is gonna run out one day. We're probably gonna need more silver. We know what the sentiment levels are, especially in the juniors at least. Silver is still the only metal that's not above its 1980 high. The only metal in the world, I'm pretty sure. So if you just had to take a guess, do you think this sector is, do you think the silver miners, for example, are gonna go down permanently, that it is different this time, and this is just a trend that's gonna continue forever and ever and ever, and there's not gonna be a silver sector? Or is it not different this time? Sentiment is gonna improve because, face it, we're not at euphoric levels. That's typically a big major top is euphoria. This was absolutely euphoria. This was absolutely euphoria. We don't have euphoria. We have like euphoria. This doesn't go back that long, but 2011, yes. Here we had euphoria, and this was the result. This was the hangover. So now we had a fat hangover. Is this gonna, if it's not gonna go down forever, it's gonna break this trend line, right? And that looks like a pretty fat consolidation in that case, because this goes back to 2013. So if I had to guess, I would think we're gonna break out to the upside. And if we do that, the saying is, the bigger the base, the higher in space. So what's gonna happen? I don't know what's gonna happen. Well, let's say we break out of here, and then all the traders, and this becomes the new hot thing, and maybe crypto's taking a beating at the same time, yada yada. Maybe silver prices shoot up, interest returns, and there's barely any silver juniors, and the money flowing in because there's trillions out there if a fraction of a percent gets into the junior sector, what could happen in that case? We know how we know how depressed it is. We know how, as he said himself, we know how the longest running drought. So we know how little capital there is. What happens if you go from that insanely low interest, lack of interest, to a lot of interest? And GDXJ, for example, it's not excuse me, it's not going anywhere, really that fast. But hey, I mean, the problem is not going away. So far, gold has outpaced inflation. One thing to note, as always, is there's been a shit ton of dilution along the way. So I'm not in the camp where, well, we're gonna go back to, necessarily just looking at a chart. I look at valuation. There's probably miners in GDXJ that, yes, the index is down here, whereas it was up here in 2011, but hey, they're not that cheap now, even, because they printed so much money that relatively it's like they're already up here. Maybe I'm exaggerating, but I hope you get my point. I'm a value investor. I look on a case-by-case basis. I'm not sitting there, it's like, well, this has to go up here because everything's gonna have to go higher. I mean, probably it will. I mean, sooner or later, I wouldn't be shocked that we went past this. But the mining sector is also very good at just destroying value. So you could have whatever good cases, they just keep going up on average over the next 5-10 years, and these guys theoretically could be destroying money in a way that, hey, this particular index doesn't really go up. But I don't give a shit about GDXJ either, so I don't see necessarily the edge. And I'm not a trader. I don't think they are the cheapest ones. And again, it's like if we Defiance has been, around for quite some time. It's like, yeah, if I had to guess the junior sector again, it's like, do I think the next big move is up or down? I mean, this was getting lower and lower and lower, and lo and behold, big move. Okay, yeah, but SILJ is still consolidating. Defiance isn't like super hot. Juniors overall are not super hot. There are some hot juniors, but it's not like there's just a flood of money getting into the sector. Do I think that's gonna happen? I mean, if history is a guide, it's a guarantee in that case. But let's leave some room for error. 99.9%, sure. If that happens, yes, this would be breaking out. GDXJ would back test here, plow through that, and keep going higher, unless they dilute a shit ton, or gold prices go down a lot, or inflation goes up a lot, whatever. But I'm focused on cheap juniors. Yeah. So, man, I thought, as always, I was just gonna do a 20-minute video or something. But like, okay, to wrap it up, there's not a doubt in my mind that if you just keep buying and holding undervalued securities, sooner or later you're gonna make money on them. And there's not a doubt in my mind that we are not at anywhere close to euphoric levels in the junior sentiment. So we know we're far from a long-term top. I mean, again, if we're expecting a long-term blow-off top, we need to get up to super high sentiment and valuation and all that. So personally, I think the junior bull is around a year old. I don't think we've seen anything yet, because there's stuff out there that's so cheap it's surreal. And if that's the case, I don't even need to think about selling. And I'm a stock picker. There's juniors out there that I might even think are fairly priced or overpriced, but they are not the ones I own. I could be wrong about that, but I'm only interested in having my money invested. I want to own partial ownership of companies that have assets that either are way more valuable than I'm buying them for, or could become way more valuable than I'm buying them for. If I'm on average correct on my assessment of them being cheap, then positive returns, is only a function of time. It's a when question, not an if question. And again, given where we are sentiment-wise, given where especially gold is and how valuable gold projects are today, record high, we're certainly not anywhere close to some euphoric overvaluation top in the average gold junior. That's why I can hodl very confidently, because I know there is no way in hell my portfolio is overvalued. If it's undervalued, the risks are to the upside. And it's a matter of when, not if. Not that every case is going to play out exactly as I hope, not that blue sky is yada, not that I need a blue sky happening plus a sentiment top, which means overvaluation on top of the blue sky potential. No, I would be happy if my portfolio could go up 100% over 2 years from now. That's a 41% compound rate, which is extremely good, which is going to become a lot of money if I can find a portfolio that I think has a very high chance of doubling in 2 years from now. And then in 2 years, the portfolio might look different with other cases that I think have a very high likelihood of doubling over the next 2 years, etc., etc., etc. And then 10 years from now, I'll look back and say, hey, oh, the portfolio is up 15 times or something. Instead of betting everything on getting rich quick schemes or stuff like that, because I don't think it's that hard of a ask to find some juniors that have 100% plus potential over the next 2 years, or 200% plus potential over the next 3 to 5 years. I think some are going to overshoot that by a mile, and I think some are going to fail. But on average, I have a very hard time seeing that if I went away for 2 years, that my portfolio would not be up at least 100%. Do I know exactly that's going to happen? No, and it could be that, it's down 20% over the next 2 years, and then year 3 it's up 300%, stuff like that. You never know. I don't try to predict that. I just want to buy shit that I think is worth this much and is trading down here. So this becomes my margin of safety. And I believe, like Warren Buffett, that intrinsic value is just a magical thing that for some reason companies tend to gravitate towards that. And if it goes down, it just means that in the meantime, it just means that there's an even higher margin of safety, and I would like to buy even more. Because if I'm right, sooner or later, boom, this closes, and I made money on my average holding. If we go into a sentiment premium with a euphoria, then you can add on whatever. Double whatever return it would be at a fair value portfolio. So I don't have many. When this market gets hard, it's when we can find something that's cheap. The top in 2016, quite hard. Had to concentrate a lot. Not that I necessarily wanted to, but there were not that many cheap ones. So I went into alpha, and I think it was around here I talked about silver. Juniors finally looking cheap, and I think there's a few cheap ones out there still, and silver is obviously up So if one adjusts for that, I don't think even silver juniors are particularly expensive now. I still think though that gold juniors are the cheapest. Anyway, thanks for listening. I hope you got something out of it, out of this. Um, and yeah, consider me biased if I talked about any companies. This is not buying or sell recommendation. This is not investment advice. I'm just talking about how I think about this sector and markets and investing. I own shares of the fine silver, for example, so twice biased there, or biased there at least. And I just used it as a proxy for silver juniors overall. Uh, uh, yeah, again, not investing advice. Don't invest money you cannot afford to lose. I don't know what stock I'm gonna make money on, or exactly how much money on, or which I'm gonna lose on, etc., etc. I don't try to predict exact outcomes. I just try to put myself in the most asymmetrical risk-reward situations I can find, and then uh, time will show if I was somewhat, correct, etc. Thanks for listening. Bye bye.